Nike shares having their best day in 6 months, staying with retail. They reported strong results. Stock got upgraded today to overweight. #1 analyst in the group, that's JPMorgan's Matt Boss, has been on the sidelines for 18 months. That's pretty interesting in and of itself. It's our call of the day for obvious reasons then. All right, what about this? Nike.
Why buy this at a 19 PE when there's so many stocks been slaughtered?
Well, it's not a
killing
19,
it, man.
and it's not a 19 PE.
Higher than 19.
All
Look,
geographies
the company,
are doing well.
The company is executing extremely well, and you point out the geographies. It's North America and China, which are the most important ones. But it's not 19. It's mid-20s.
That's
it's
crazy.
20.
That's
it's 25.
crazier.
Well, here's the thing. It's not crazy if the sentiment in the market wasn't as bad as it is right now. You could buy this if we were in an uptrend in the market, but when multiples are getting rated down all day long, I don't want to own a 25
This cannot
multiple.
be the best idea in the market right now. It can't be. There's stuff that's been slaughtered that's down 35%, that has real cash flow, that are good companies within the S&P.
Why look for things, though, that have been thrown in the trash can that are maybe harder to identify? This is a tried and true, right? I mean,
this is not a slam dunk. There are all kinds of new players coming into the shoe business that are getting a lot more traction now, smaller. The trend is now to be hip and streetwise and new artists.
All geographies accelerated, man. They raise their guidance.
I cannot get excited about buying this at a crazy PE. Not today. I just can't do it.
I agree with him. And I don't understand the recommendation today because he didn't really do anything to his numbers. He went out next year, and I think it's very expensive. I'm not willing to pay 2 times a market multiple, essentially, at this point in the market when I think I can get it cheaper, so I'd rather wait.
I agree with you guys. I mean, you look at this. If you own this, take this as a source of funds and put it into other parts of the market that are cheaper. Companies
You own it, sell it. It's a gift.
Come on, man. So you're saying, okay, sell the RIP.
Yes.
That's been taking place in the market and put it somewhere else. Where are you going to put it?
Put it into Honeywell, put it into Disney, put it into JPMorgan, put it into companies that are going to have positive earnings growth for next year. That's multiples have compressed by 30%.
Can I say two things? Sorry.
Please.
Why not, Josh, has
Why not
anyone ever
three?
stopped you before?
The first is, what is your time frame? Because from a trading perspective,
you're normally a wallflower.
Well, wait a minute. In February, this stock sold at a mid-20s PE and went from 62 to 86. So who cares about that? If you're a shorter-term player and you're looking for an opportunity on a trade, Nike looks pretty good here. It had a false breakdown, and now it's recovered really quickly. 3 times it broke that level, and I think if you want an entry in a global name that competes in every market, it's not the worst name. It doesn't have to be the cheapest, and this is the most important thing. Actually, if you look at what's working in the market this year, the cheapest decile of stocks in the Russell 1000 are the worst performers. And the most expensive decile are the second best. So that's an irrelevant argument on 2 levels. Everyone could look at a PE. It's not like inside information what the valuation is. The question is, why is it trading at an above market multiple? And in a lot of cases, there's a reason why it's deserved it. It's earned it with the fundamentals of the company. So I think you can basically pivot off 69 as your stop. You can own it right here. Your risk is less than 2 points. Your upside could be 8 or 10.
It worked on Netflix for 2 years too, and then it didn't.
But if you know what your risk is, but listen, Netflix is in the midst of a breakdown right now. If you know what your risk level is, you can go into a trade and say, what am I willing to risk for the upside, and is this a good entry? I think on Nike, you have a very defined risk here at that breakdown level. You don't have to wait a long time to find out if you're wrong. The market's going to tell you quick.
Brenda?
I think, whether you like Nike or not, I think it's a good sign that here's a company that's leveraged to the global consumer, especially the Chinese consumer in North America, that's putting up good numbers. And so we'll see where the stock ends up if it hangs in there today. If it does, I think it's a good sign, and I'm hopeful that once we get to Q4 earnings in January, February, if we can get some good numbers and good traction, and things aren't as dire as everybody seems to think they are, that maybe we will get some kind of recovery.
I like the idea of asking ourselves, what other Nikes are out there? Like, we've just had a lot of negative sentiment poured on the market, and with good reason. There are some real issues that are now manifesting themselves. But to your point, like, there are probably some other companies that are doing just fine, and they have come down in valuation. They've come down in price, and they've got a lot of people betting against them. And maybe they'll come out and do something similar to what we saw Nike do on an actual earnings call in late January, for example. Like, I think that's an interesting question right now.